Today, I will be showing you this amazing strategy that was purchased from dark web, and you wouldn't believe if I told you it was purchased for $5,000, but we would be giving it out totally for free, and we would be giving out all the details that was said in the strategy, so make sure you watch till the end. This strategy made 78% win rate within a short period of time, and it is very easy to understand. I will backtest it 200 times with an initial account size of $1,000. It is also important to note that the strategy has 1-to risk to reward ratio, so you should know that even when the market gives a 40% win rate, you would still be smiling at the bank. So without wasting much of the time, please make sure to hit the like button and subscribe, as it really helps the channel. Okay guys, for this strategy, we will be using the Euro-United States dollar pair, and we are on the 3 minutes time frame. Like I said earlier, this strategy was purchased from dark web, and for the sake of YouTube policies, I won't be showing any part of the video on this video, as when purchased, the owner used a lot of sensitive words, so I would just go ahead and explain the whole method on this video. So watch till the end, because I might be deleting the video very soon. It was purchased for $5,000. But we are happy to share every details for free, so relax and understand what the strategy is all about. And please, if you have not yet subscribed, then click on the subscribe button, and also hit the like button, as it really helps the channel in making all of its video for free. So as we move on, according to the creator of the strategy, he used 3 indicators, and he did make mention of it working only on small time frames, as that's why it is really good for scalping, and also, he mentioned that for the best results, you can try it out on major currency pairs, but for the purpose of this video, we would be using it on the Euro-United States dollar. You can as well try it out on other major pairs mainly. The amazing thing about this strategy is 1. It has a high win rate ratio. 2. It has 1:2 risk to reward ratio. And 3. It consists of only 3 indicators, which makes it very easy to understand and also beginner friendly. I forgot to mention the part that it has 2 entry methods, so be ready to get a lot of good entry trades using this strategy. Now, let's add our indicators to the chart. For the first indicator, go ahead and search for Fakey Price Action, and it's this one right here by Fusion Turtle Trader. This indicator contains a lot of script, but we would be adjusting it when we done adding our indicators. Now for the second indicator, search for the Grover Lorenz Activator. This one right here. Now this indicator was made by 2 amazing script writers on TradingView. Thanks to Alex Grover and Lucia Lorenz. This indicator was the original idea of the 2 script writers, who wanted to revisit the classic parabolic SAR indicator. The Lorenz Activator aimed to converge towards price the longer a trend persists, thus allowing for potential early and accurate exit points. And now for the last indicator on the chart, search for the Powered Kaufman Adaptive Moving Average. This one right by Jagged Soft. This comma has to be flat during ranging markets, and close to the price during trending markets, which is what makes this moving average one of the most useful in technical analysis. Now let's go ahead and adjust the settings to better understand the strategy. The reason why I took out time to explain all this is because I wouldn't want to leave out on any details on the main video, so as to make sure you fully understand the video. Now for the price action, double click on it to bring up the settings panel. For the inputs, it's on 50, 20, head over to the style, untick the signal MA, the hull MA, untick the swing high and swing low, untick this bar color. Now for this section, go ahead and change color 2 to orange and color 3 to blue. After that, untick all these settings, and when you are done, go ahead and click on the OK button. Now for the comma, go ahead and bring up its settings panel. For the style, we won't be touching any of its settings, and the same applies to the inputs, as they are perfect on default. Now head over to the GLA, bring up its settings panel. For the inputs, change the length to 500 and leave the multiplier at 5. For the style, untick these 4 boxes, and when you are done, click on the OK button. Now, our chart looks cleaner and easy to understand, so let's quickly go over how each of these indicators work, before we head over to the rules for entry. Now, for the price action, it changes the colors of the Japanese candlestick, as a green candle shows a bullish move, and orange candlestick shows a pullback in an ongoing bullish trend, as well as possible reversal towards a bearish trend. Now for the red candlestick, it shows when the market is on a bearish trend, and the blue candlestick shows a pullback in an ongoing bearish trend, as well as possible reversal towards a bullish trend. For the comma, it's the reason why we have these colored background on the chart, as the red moving average shows a bearish trend, while the green moving average shows a bullish trend. Now lastly, the GLA, as this is the red and blue curve we see on the chart. The red curve shows more of sellers in the market, and the blue shows more of buyers in the market. Now Now, as I said earlier, this strategy consists of two parts for a valid entry, and I will be showing both parts in this video, so please try and understand each part of the strategy to avoid making unnecessary mistake. For a buy signal to be valid, we would want to see the comma in green, with an active green background as our first confirmation. Then we would want to see a red curve from the GLA as our second confirmation. Once we get this, we would be opening a buy trade at the peak of the next green candlestick. So we see here that we met our conditions. As we see, we are in a bullish trend as confirmed by the comma. Then we had our red curve from this point on the chart as our second confirmation. Before we got our green candlestick at this point, we would go ahead and place a buy order at the peak of this candlestick, and set our stop loss at the recent swing low while our take profit is 2 times the risk. And as we can see, it was successful. Now this is the first part of the strategy for a valid buy entry. Now let's move over to the second part for a valid buy entry. Now we would still want to see a green comma on the chart, and the background colored in green. Also, we want to see the GLA colored in blue as our second confirmation. And for our entry signal, we would want to see a red candlestick present while the GLA is still in blue. When we have this on the chart, we would go ahead and place a buy order at the peak of the next green candlestick, while all other indicators remain the same. So we see that we got our first confirmation here, as the comma is still on green with a green background, and our GLA changed to blue at this point. We waited till we got a red candlestick here, before we started the hunt for a green candlestick, which we got here. We would go ahead and place a buy stop at the peak of this triggered candlestick. Our stop loss and take profit still remains the same, as we will be using the recent swing low of price action as our stop loss, while the take profit level is at 2 times the risk. From my personal experience backtesting this strategy, I would say that the first part of entry is more effective than the second part, as it gave more winning than the second part of this strategy, but nevertheless, they both still yield profit in a short period of time. So please make sure you follow the rules exactly as it was said, as he did not give possible errors to avoid when using this strategy. But you can drop your questions on the comment section for clarification, and I will try my best to answer it as soon as possible. So let us move on to the rules for a valid sell trade, before we head over to the backtesting of this strategy. Now for a sell trade to be valid, it is exactly the opposite of the buy trade for both part of entry. We would want to see the comma in red, with an active red background as our first confirmation. Then we would want to see a blue curve from the GLA as our second confirmation. Once we get this, we would be opening a sell trade at the bottom of the next red candlestick. So we see here that we met our conditions. As we see, we are in a bearish trend as confirmed by the comma. Then we had our blue curve from this point on the chart as our second confirmation, before we got our red candlestick at this point. Not far from when we got the blue GLA curve, we would go ahead and place a sell order at the bottom of this candlestick, and set our stop loss at the recent swing high, while our take profit is 2 times the risk. And as we can see, it was successful. Now this is the first part of the strategy for a valid sell entry. As I said earlier, now let's move over to the second part for a valid sell entry. Now we would still want to see a red comma on the chart, and the background colored in red. Also, we want to see the GLA colored in red as our second confirmation. And for our entry signal, we would want to see a green candlestick present while the GLA is still in red. When we have this on the chart, we would go ahead and place a sell order at the bottom of the next red candlestick, while all other indicators remain the same. So we see that we got our first confirmation here, as the comma is still on red with a red background, and our GLA is on red. We waited till we got a green candlestick here, before we started the hunt for a red candlestick, which we got here. We would go ahead and place a sell stop at the bottom of this triggered candlestick. Our stop loss and take profit still remains the same, as we will be using the recent swing higher price action as our stop loss, while the take profit level is at 2 times the risk. Like I said earlier, the first part of entry is more effective than the second part, as it gave more winning than the second part of this strategy, but nevertheless, they both still yield profit in a short period of time. So please make sure you follow the rules exactly as it was said, to avoid making mistakes. Take this strategy serious if you really want to grow your trading account. Now let's head over to our backtesting for this strategy, as we would be using an account size of $1,000, and we would be covering 200 backtested trades. We only risk 1% of our capital on each trade. Let's quickly dive into it. So we just finished the back testing for this strategy, and we can see that the results are amazing. We had a win rate of 78% in 200 back tested trades, having won 156 trades and lost 44, which made us 268% return on investment. And I found those wonderful trade setups within 5 months, although commissions and spread fees would eat up some of the profit in real trading because it was not included in the back test. So you definitely want to expect that number to be lower when trading live. The profit factor for this strategy is looking good, I guess, and we had 7 wins in a row against 5 losses in a row. So yeah, I'm definitely happy with these results. Okay traders, that's it for today. Thanks for watching, and see you in the next one.